Hi guys, welcome back. So these few days were truly a roller coaster indeed, huh? First I'll update the market and then I'll update my recent status and then we'll go over with our stocks. So the market had been pulling back for more than a week already. Yesterday it was truly emotional day because it was selling off like a big dive at some point, breaking this blue trend line that had been formed for the last 2 years. So it looked pretty scary, right? So I really hope no one had panic sold anything or maybe even take advantage of the dip among all the fear. Different than normally where all the sell-off were mainly happening in the growth stocks and Chinese stocks. Surprisingly, the past week, Chinese stocks have really been outperforming the US market. So you can see that even though the Nasdaq had been selling off for 5 to 10%, the CWEB or KWEB had been growing steadily every day. Today, another 10%. So it had grown 30% since the low of last Wednesday, countering the falling trend of the US stocks. This kind of situation is quite rare to see, but I don't think it would be the only time in 2022. Because I kept saying that I believe 2022 Chinese stocks would outperform the US. It doesn't mean it would not follow the US correction. It would, but I do believe it would outperform, especially the Nasdaq. Because the Nasdaq had been growing too much in 2021, so it needs to have the time to digest the high valuation and it needs to have the correction that's long overdue. I don't know when, but you can see that in the past 2 weeks, it had been selling off more than the other index. So this is another lesson of not chasing what's gone up high and not cutting loss what had been given up by everyone else. What I'm glad about is that I think none of our Discord members had panic sold yesterday, even though it was very, very scary at some point. Because yesterday morning on the Discord, I have reminded the support line had been reached for the Nasdaq. I drew this long time ago, the 151 support line. So the moment it reached this yesterday, I've notified on the Discord and said what I have bought with the dip. But basically at that point when everything was so fearful, whatever dip you grab, you probably would have been making good profit by now already because everything was being dumped hard and quick. The whole week was about the fear of rising interest and tapering and reducing bond from the Fed, and yesterday the Goldman Sachs just gave another push and said that the Fed is gonna increase 4 times the interest rate this year, not 3 times. So it gave a final shake to the market, created this dramatic turnover, and in the end we all know what happened. The big dogs in the Wall Street were taking advantage of the fear of retail investors and taking away all the chips with blood, making people panic sell and cut losses so then they can buy it at a low price. Same trick over and over again. But I really hope none of you had panic sold or even take advantage of the crazy dip. Because in my previous videos last week, I told you a few stocks I bought, like for example the PDD. I notified the buy at 49, now is above 60, so strong run up of 26-27% since. But to update you right now, we are at the critical level already because 157 it's quite important to hold. If we can stay above, we might resume the uptrend. And if not, there might be more dips coming. So watch out for this level. And for now, I still treat this as a rebound, not a reversal. Because if you think 2021 is a very difficult year, then I'm afraid to tell you that 2022 would be even more difficult. The market would be super volatile, sectors would rotate really quickly. And most likely, it would not be the previous hot sector that continue to lead the market. As I said before, instead of the Nasdaq, the QQQ or the big techs, it should be more rotating to the Dow Jones sector, the Russell 2000, and also the Chinese stock market. Capital is limited, especially when the interest rate would be rising and with the Fed's tapering. So it's not going to be like before where most sectors can grow together in 2020 when capital is already fixed amount, that means it's just gonna be the same amount of capital rotating into different sectors. So again, we need to refresh our mindset and do not use the same kind of experience to trade in this year. So to make it more clear for beginners, these are the major index we watch out for: the S&P 500, the Nasdaq, the Dow Jones, the HSI, the Shanghai Composite or A shares, and the Russell 2000. Basically, that's the major index we watch out for our stocks, right? And the S&P 500 is the main index that would affect pretty much everything because it's the most comprehensive and includes all sectors. So in this case, the fact that the S&P 500 grows does not mean that all sectors are growing, but if it drops, it would mean that everything is dipping. So other than the S&P 500, everything else could rotate one after the others. So Nasdaq was growing very much so, especially the Nasdaq 100 or the QQQ, very well, very strong in the year of 2021, mostly because all the big techs, the FANGs, the chip sector had very good growth rate last year. But because so, I am less bullish on them this year because when they report earnings last year, every time it can give a boost to the share price. But this year, because of the high basis from last year, the growth may not be as well as last year. So it would be kind of difficult to live up to the expectation since last year was so good. So I would give it a question mark for the big techs. Like I said in the last video, best case scenario, they would stay flat or moving up and down or maybe slightly down. And for Dow Jones, because last year it did not benefit that much from the S&P 500 climbing, so maybe this year it would catch up a little bit. And also with the rising interest rates, it should benefit a lot of the traditional industries, like banking, for example, and also some traditional companies that can hedge the inflation. And next is the Hang Seng Index, which I should be the most bullish about because it is extremely oversold, like similar level as after the financial crisis. To give you an idea, right now many of the companies have a PB ratio of 1, at most 2. Some are even below 1. So that means you are buying the company most likely lower than the book value of the company. Bargains everywhere. So I think in the long term, to lose money with the HSI right now, looking at 1 to 2 years plus, there's very little chance to lose money with it at this price. So when the capital is fearful, I think this is one of the best place to go to. Last year it was beaten up because the worst kept coming for the Chinese government regulation and the US-China relationship. But I think most of the factors already have been priced in. People are getting used to it and are finding ways to live around it. So I think in the future, bad news is not gonna cause that much fear anymore. And what I am the most bullish for would be the A shares. I think there are a lot of opportunities with the Shanghai Composite this year. Maybe not only this year, but for the next 5 to 10 years, because let's face it, I think China is gonna have more and more of the good companies listed in China because they want to grow the financial market to international investors and Chinese companies without any risk of delisting. And also there are still a lot of saving or disposable income that might be injected in the stock market in the next 5 to 10 years. So I think lots of room to grow. The only thing is that the government had given out the policy to have a bull market but slow. So it's very hard to see an explosive growth, but I think the government will try to control it to have steady and slow growth. But in this kind of scenario, with the index, it means the individual stocks would do extra well like this. And last but not least, the Russell 2000. I've talked about it a few times. It had been going on the sideways for more than a year. I think it would catch up. So in general, this is how I view different sectors in this year 2022 and how I would invest accordingly. And everything would be affected by the S&P 500 anyways. And in this year, I see the stock market very, very volatile. Unlike before, I don't think we're gonna see a one-directional growth, but more like up and down a lot. But maybe in a whole year, mostly flat. in the end. So very, very volatile. Maybe at some point we might see a bigger correction, like a 10 to 20% at least, medium-term correction that I have been waiting for. And this would be the occasion for me to buy back a lot of the long-term position I wish to build, the long-term position that I trim. And before then, I think I would adjust my portfolio according to the market situation. Before, I had about 20% of my portfolio in the short-term trading and 80% in the long-term, but now because of the volatile market we might see this year, I plan to increase the 20% into 50%. So 50% into short-term trading and 50% in the long-term holding, because I think this year would be very, very difficult for the long hold, given the market scenarios and how fast the sectors will rotate. So now that I have explained the trend I foresee this year, by the way, it's only prediction. Don't use it as a Bible. So now I would move on and update my recent status and our stocks. So you know, I have trimmed, like in general, 30 to 70% of my long-term positions. Right now my top holding is the K-Web, actually the C-Web, because I have a higher risk tolerance. As I explained before, I think there was a good chance that HSI had bottomed, but it doesn't mean that all the Chinese stocks would bottom as well, because it depends on the capital preference, whether they like this sector or medium to small caps or not. So I think it's better to put the money into the ETF or index fund that relates more to the Hang Seng Index. And I suggested the K-Web or the Yin, ticker symbol YINN, that relates to the FXI but triple. I have both Yin and C-Web, but I do not plan to long hold them. I think this year, before the big correction we see, I don't think it's the time to get into anything for long hold yet. And to update with the resistance. Right now we are at the first resistance at 13.7. And if we can successfully pass this, the next resistance is at the 15 level. If we get rejected, we have a support at 13.2. So you can set a profit limit in case it dips below. Baba has successfully formed a double bottom. If we can hold the 130 level, next target is 150. In this last 2 trading days, I took advantage of the dip. For example, PayPal bought at 178. Right now, it's already 192. Today, it had pushed through 4 resistance. In one day, very bullish. So you can set a stop limit around 188 in case it dips again. Otherwise, you can just let it ride. Yesterday, I also bought Xiaopeng and Palantir. Because last video I did, I said if I can drop to 70s level, I think it's good to add the extremely oversold growth stocks. And I gave suggestion of SoFi and Palantir. So yesterday, the lowest we got to was 80 exactly. So it was very, very close to my target. So that is why I said I would buy Palantir at 15 level, because it's looking more and more attractive. I said RK is at 80, so it's okay to start accumulating the Palantir shares. Especially, there are many members who asked me Palantir before, a couple months ago. And if you're bullish, I think now it's good time to start accumulating. So just this 2 days alone is more than 10% profit. So you can set a profit limit or trailing stop loss, or you can wait for the market signal. For now, Palantir is at the first resistance level around 17. If it can pass, next it's 18 and then even 20 to 22, okay? Depends if you want to hold it long term or short term. But for long term shareholders, I think now it's at a good range. Xiaopeng had a very big dip yesterday, dropping to the 40s level. So I bought the dip because I still couldn't buy back NCL yet. Even though it's the long-term position I trimmed that I want to buy the most back. So I bought Xiaopeng instead. Today we had a good increase of 7%. From the low of yesterday, 12% already. So again, it's better to have the profit limit to protect your profit in case the market turns. Resistance between 46 to 48. In my last video, I also suggested a good dip for the Bitcoin and Ethereum. And you can see that these few days it had dropped to 39,000 support. Very, very good support. 39,000 to 41,000. And we see a very good rebound since then, and I think it might as well just continue to at least 44 to 46, and Ethereum as well. So for that, I said I bought the MSTR MicroStrategy for Bitcoin. We had a very good rebound for the last 2 days. It should follow the rebound with Bitcoin. My cost is at 470 and the new support is around 500. So for crypto, other than MSTR, I also added the Ethereum ETF, ticker symbol ETHE, which I suggested last video. I said if it dips to 26, I would buy the dip, and I did. Right now it's at 28, already up quite a bit. I think it might continue with the Ethereum rebound following Bitcoin movement. I think right now Bitcoin has been following the tech and Nasdaq quite closely already. So if I think the market, the Nasdaq, should rebound, then I think Bitcoin would follow as well. So now let's move on to more of our long-term stocks. First one is baby NEO, okay? So NEO had been the third time testing the 27 support. I hope it doesn't do another time, because we have a Chinese saying called 事不过三. It means literally things should not be more than 3 times. So if it tried to test the support the 4th time, I am not sure if it would hold again. So I trimmed about 50% of my NEO shares, 25% of EH, 70% of LKCL, and 30% of Xiaopeng, and all of the Luckin and Zep. And I've been asked many times, maybe instead of asking, it's more like a doubt or challenge. Why did I trim if I have conviction for them and at such low levels? So I have explained many times why I trim at first. The most direct cause is for tax loss harvesting. And secondly, because right now the market is very volatile and I believe HSI had bottomed. So I chose to locate some of my portfolio in the KWeb to have more correlation with the HSI. And also I speculate a bigger correction with the US stock market. That's why I want to add the long-term positions with this heavier stock market correction. But overall, none of the conviction had changed for the long term, and neither my investing philosophy had changed at all. For LKCL, since day one, I kept saying, invest with what you can afford to lose. And that's what I do. Since day one, I adjust my LKCL holding according to my risk tolerance and how much I'm willing to lose with it, because it's super volatile, it's very risky. And right now, we need to also factor in the Chinese stocks delisting for LKCL. It's not the best because it does not meet the requirement for a second listing in Hong Kong yet. So that has increased the risk since the beginning of 2021. So again, my point is invest what you can afford to lose. Some people ask me why I sold LKCL last month after such a big sell-off at such low prices. And what I think is that what you have in your portfolio should not be according to how much you lost with it. Yes, I'm at loss with LKCL around 10 to 20%. But if you compare LKCL with the other big techs, take Alibaba for example, right? It's been down 65% from the high of last year, right? So year-to-date loss was much more than LKCL. And my reply is always that you need to see right now everything is down so much, so it's okay to consolidate or buy large institutions or passive investment funds, ETF, and the major index. So if I am the institution, I would choose to locate the fund in the big techs first, and after they have rebounded, then I will start to locate more to the medium to small caps when the market has more certainties. I think this is the natural mindset and the strategy for most institutions right now. Next is EH. Now, maybe it's a little bit affected by the catalyst in the medium term, because I expect in a few months, somewhere in the second quarter, Yihang should get the certificate. Maybe it's because of this. I think Yihang has a better looking movement than even NEO. Today it had a good move to push through the 30 MA resistance. Next would be to see if we can close the gap between 17 to 19. LKCL has a resistance at 65 and 68 cents. If we can stay above Nkcl to challenge the 89 cents. And if the market continues selling off, we might get rejected. But anyways, we have a support at 50 cents. It's not far anyways. And also, out of everyone, ZEP has seen the low the earliest on December 17 when it had a very big volume. Ever since, we had been quite steady, even though the market was super volatile. So it does seem like there is institution holding through this level to consolidate in a small range to potentially form a bottom. Today, we have seen a good hold above the 3 MA 5, 10, 20. Now it's consolidating in a small triangle and might be breaking out anytime soon. Of course, breakout can be up or down, but in this case, if the market continued to rebound, it would most likely be up. Luckin Coffee. Haven't updated for a while and I've got a lot of asks for that. So for Luckin, I have reminded to take profit on the day it reported earning. It had reached the high of 17 again and again around 13 when I said it might be breaking the uptrend. Ever since, we have seen quite a correction here, and even though I sold Luckin, my long-term conviction on Luckin Coffee has still remained the same. I think the sell-off is because it had gone up so much over the last 2 years. The investor like myself had what, 4x, 5x at least already, so they would take profit. Right now I see many people getting frustrated with Luckin, saying that maybe it's not that good company after all. And I don't agree. I think the sell-off has nothing to do with the fundamental, but mainly profit-taking. Put the 2 support line here that I plan to buy back at this level between 7.5 to 8.5. And we have reached this level yesterday. So that's the good news. And the bad news is I think the correction is not long enough yet because we do have a lot of people trapped at the top over a few months. Period. So according to that, we might need longer correction to digest that selling volume. It might form a double bottom before breaking this strong resistance around 12. So good news and bad news. Now that's it for the update today. I hope you find this information helpful for the medium term, the short term, and the long term. Now, if you have enjoyed this video, please give me a big like and write me a great comment. And I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.